Welcome to Student Loan Refinancing, Steps for Successful Savings. My name is Tricia Poplasian. I am the college counselor with CU Student Choice, and this is my email address on this slide for anyone who would have questions outside of the webinar. Please feel free to email me at any time. So let's talk a little bit about what is student loan refinancing. Refinancing is basically the process of taking out a single new loan to pay off your old student loans. You can include your federal student loans as well as private student loans, and you can combine all of those. Even if you have 4 or if you have 8, you're going to combine everything into one for a student loan refinance. So you will have one loan. You're going to have a new lender or servicer, and that's actually the first step as we're talking to families and borrowers. They ask us, we don't understand what a refinance is, what is the process? And the first step is basically understanding that you're going to decide which of your student loans you want to refinance, and then you're going to select a lender. So you want to definitely compare and search for lenders because you're wanting to, with a refinance, have a new term on your loan, hopefully get a lower interest rate and a shorter term, so you can calculate those savings over the life of those loans and get the best savings possible. And borrowers get to choose. So no one, can tell you which lender to go to or recommend a lender. So as a borrower, it's your choice on which of your student loans you want to refinance, and then again, which lender that you want to choose or select. And we're going to talk more about that during this webinar. So hopefully you can make a smart borrowing decision. Refinancing is also, it's very important, not just combining the new loan, not just getting a better interest rate and maybe a shorter term or more manageable payment, but you want to calculate the savings over the life of your loan. If you really look at like taking your 20-year student loan and reducing it down to a 15-year, using our refinance calculator, you can see the savings over that 5 years. And that's very important for borrowers to look at and really understand that number and the funds that they can save over the life of the loan. So basically, that's what a refinance student loan is taking your current student loans and taking out a single new loan to pay off the old ones, and hopefully having the opportunity for many different lenders and a better term and a lower interest rate. And over to the right on the screen, you're going to see a federal consolidation. So remember, refinancing student loans is with a private student loan lender, and you can include your federal and private student loans. There is a federal consolidation option just for your federal student loans, and that is through the Department of Education. So what are we going to talk about today? We're going to talk a little bit about, is refinance right for me? And hopefully help you make that decision before you decide on a student loan refinance. Is it right for you? It may not be right for you at this time, but maybe in 6 months to 18 months, it may be right for you. Understanding what you have or taking stock in the student loans that you do have. So before you refinance, you understand what you have, where you're at, and those benefits, because you want to understand what you have and definitely don't want to refinance and lose any special benefits that you may have. Then we're going to talk about refinancing lenders and options and how do you choose. And we talked a little bit about that. As a borrower, that's really your first step, is understanding what a student loan refinance is, gathering the information of what you have today in your student loan portfolio, and then comparing and searching for a good, solid lender. We're also going to talk about borrower requirements. Are you eligible? So you get a little better understanding of what is required for borrowers before they complete that refinance application. Then we're actually going to, at the end of the presentation, give you some real life examples of people and borrowers who have completed student loan refinances, and maybe they decided they were going to do it. And then after they considered all of their options and talked to a counselor, they decided not to. So is refinancing right for me? Understanding your options and evaluating your individual circumstances will help you with making a smart decision. It's important to understand, again, what you are receiving and what you may be giving up, and to look at the risk. The risk may be too much for some, and for others, it may not matter, for instance, what benefits that they give up. So they go ahead and save lots of money and decide to refinance. Understand what benefits and protections you stand to lose, and make sure those benefits you are getting are worth it. So let's take a look at the questions on this slide. These questions are definitely something you want to consider before diving into refinancing. What type of student loans do you have? So understanding federal student loans, number one. If you have federal student loans, the Department of Education has given you options and benefits with those federal student loans that you will not have or carry with the private student loans. And if you would do a private student loan refinance and include your federal and private student loans together with a private student loan refinance lender, you would forfeit those benefits. So the benefits include income-driven repayment plans. Most borrowers, or a lot of borrowers that I talk to, are on income-driven repayment plans. If you refinance, you would not have that option. You would lose that benefit. There's also life and disability discharge for federal student loan benefits. And again, that's another benefit that you would forfeit if you decide to refinance. So understanding what type of student loans you have and what benefits you have, it's very important before you dive into it. What is your current interest rate? So this is something very important. Do you have a variable or do you have a fixed interest rate? Are you wanting to, right now, the prime index is at 8.5% currently. It's gone up quite a bit in the last couple of years. So do you have a variable rate that has risen and you want to do a refinance to lower that interest rate? That can be a lot of savings, even if you would keep the same term that you have, or even add a couple of years to the term of your refinance. If you can lower your interest rate several points, you can definitely save money over the life of the loan. And it's also to understand, if you do have a variable interest rate, understand how that's calculated. How often will it increase? What is the index it's based on? What's the floor rate? And then what's the ceiling? So you would want to contact your lender to ask those questions. What is your floor rate? What's the ceiling? And how is that calculated? How often does your rate increase? Because you want to keep in mind, if the index that your rate is based on, such as the prime, and it starts going down, then your interest rate could also go down again. Have you calculated your savings? So this is important. Using a student loan refinance calculator, we're going to provide one to you here in this presentation. Just enter the information you have about your current student loans and play with some different interest rates and different terms. And you can see, as we stated before, knocking off 5 years on your loan can save you a lot of money, a lot of money. And sometimes, depending on your balance, that money could be a down payment for a home, or maybe a down payment for a car. So definitely a substantial savings that you want to look at. Do you need a more manageable payment? That's a good option too. Maybe you have variable interest rates, and you only have like maybe a 12-year term with your current lender. You want to try to lower that interest rate, but you might need to extend that term to get a more manageable payment. That's important, and that's a reason that some people do decide on a student loan refinance. So even extending that term, it may cost you over the life of the loan, but that might be in your best interest right now. And then you also want to consider something we haven't mentioned. You can refinance as many times as you want. So you might want to refinance now to get a more manageable payment. Maybe you do have to extend that repayment term. However, let's say in 3 to 4 years when you're financially stable or in a better financial situation, and have that employment history behind you, you can complete another student loan refinance and maybe qualify for a lower rate, hopefully, and also lower that term. Do you need to remove a co-borrower? So there may be, uh, if you have a private student loan, when you went to school, you got some private student loans and you had to have a co-borrower. So now you've graduated, you've been out of school for a few years, you've got that employment history, you've got that income, and you want to remove the co-borrower. You can certainly, that might be a good decision for you to refinance, to see if you could qualify and remove that co-borrower. Also, for those of you who's you might be a borrower on this call and you have a parent who took out a Parent Plus loan in your name, you can also refinance that Parent Plus loan, take the responsibility away from your parent, and then you take over that Parent Plus loan, keeping in mind the Parent Plus loan is a federal student loan, so it would no longer be an option for you to receive those federal loan benefits with that Parent Plus loan. Also, do you meet the lender's requirements? So as you're out there and you're comparing lenders and searching for them, that's something you want to understand. What do they require? There's an employment history that most private student loan refinance lenders require as far as income, and also credit history. So these questions, these 6 questions on this slide, are very, very good questions and something for you to consider as a borrower, and understanding is refinancing right for you. So taking stock, what federal student loans do you have? First of all, if you don't know where to go to find your federal student loans, and some of you may be a recent college graduate and you don't know all of the student loans that you have, you can actually go out to the Department of Education's website, studentaid.gov. You'll need your FSA ID and password to enter that, and then you will get a dashboard, and that's going to list all of your federal student loans, the balances, interest rates, and who your servicer is. So what should you know? What do you want to gather and understand while you're considering student loan refinancing? Well, you want to know who your servicer is, and their contact information in case you have any questions, because you're going to want to contact your federal loan servicer. What is your current balance and what is the repayment term? So what do I mean by repayment term? So is it a 10-year loan? Is it a 15-year loan? For federal student loans, the standard repayment is 10 years, but there's also a graduated 10-year repayment, a 25-year graduated repayment, also an extended repayment, and then there's income-driven repayments. So that's very important for you to understand while making the refinance consideration. Also, what is your interest rate? Is your loan subsidized or unsubsidized? So for undergraduate students, when they went to college and they completed the FAFSA, they may have, or you may have, subsidized as well as unsubsidized loans. What is the difference? The subsidized loans was based on financial need. And while you attended school, the government paid the interest on those subsidized loans. So interest didn't begin until you entered repayment. Another benefit with the subsidized loan, if you're out of school and you're in another deferment, the interest may also be deferred at that time. So that's a very important benefit to understand before you consider refinancing those federal student loans. And of course, the unsubsidized loans are loans that were awarded to students, undergraduate as well as graduate students, and they begin to earn interest immediately. Also, what is your monthly payment? And understanding what is manageable, what's your budget. So what's going to be a manageable monthly payment for you? And over to the right of this slide are some of those benefits that we talked about earlier. So these are things that you want to consider before you add your federal student loans with your private and complete a private student loan refinance. So moving on, so maybe we talked a little bit about the federal consolidation solution. Again, this is for federal student loans only. So maybe you decide that you don't want to do a student loan refinance. You do have the option to do a federal consolidation solution. So because you may have 8 different loans from your undergraduate, you may have a graduate degree and have those undergraduate loans as well as graduate loans. So you could have 10, maybe even 12, and you want to combine them into one single payment. Well, you can do a federal consolidation loan through the Department of Education. There's no origination, processing, or disbursement fees. There's flexible repayment terms up to 30 years. The interest rate is based on it's a weighted average of all of your federal student loans that you're consolidating. They'll take a weighted average of those loans, and that will be your new fixed interest rate. Again, this is for federal student loans only. There is no cosigner or co-borrower required. You do get a 0.25% rate discount with the ACH if you have that payment deducted from your account. And there's no credit or income verified when you do the application. So again, that's just for your federal student loans. If you want to just consolidate them and not include them in that refinance. So let's talk about taking stock of your private student loans. So we told you finding out what private student loans, that's pretty easy. You can go out to the Department of Education's website, log in with your FSA ID and password, and boom, it's right there on your summary dashboard. For private student loans, if you don't know exactly what you have, you could definitely contact your school's financial aid office. That would be a good resource. Also, your credit report. And if you didn't know already, you can actually go out to annualcreditreport.com and once a year get a copy, one free copy of your credit report from all 3 of the credit bureau agencies. So there's Experian, Equifax, and TransUnion. So you could go out, get a free copy of all 3 credit reports from the different bureaus, and then you can review that to get a list of your private student loans. And again, what should you know about your private student loans before refinancing or before diving into that? Your current balance and repayment term. If you've been in repayment for a while, how many months do you have left? When is your maturity date or payoff of that loan? What's your interest rate? Is it fixed or variable? And again, if it's variable, how often will that rate increase? What index is used to calculate your rate? And what is the lender's floor rate or bottom rate? What's the lowest that variable interest rate would go? And what is the highest that the interest rate would go? Subsidized or unsubsidized? The majority of private student loans are all unsubsidized loans. So that means that interest begins to accrue immediately. They're not based on financial need like the subsidized federal direct loans are. What is your monthly payment? And your servicer contact information, because you're going to want to call them and get information about your loans, or have them answer any questions that you don't have. Also, you're going to want to get a payoff statement so you know exactly what that payoff is if you do decide. Benefits with private student loan lenders, it's going to vary by each lender. Is there a cosigner release? We talked a little bit about that. Is student loan refinancing right for you because you need to remove a cosigner? Some lenders have after you've made 48 consecutive on-time payments, You can apply as a creditworthy borrower and have your cosigner released. Also, are you getting an interest reduction for automatic repayments? Do they offer any forbearance options? That's something that I didn't mention. If you do a student loan refinance, most lenders don't offer a forbearance or like say an economic hardship deferment or forbearance if something happens in life. So, if you lose your job, during the pandemic, most private loan lenders required you to continue, making those payments. Some private lenders do have a forbearance options, but that's something you want to consider and you want to ask. Also, are there any type of graduated repayment options? Remember, with the federal student loans, we talked a little bit about that's a benefit. They have 4 to 6 different types of repayment options available. Usually with your private student loans, you may only have 1 or 2 options available for your repayment. And then also, what are the refinance options? So these are very good points to understand before you, again, dive into that refinance. So let's talk about what a student loan refinance would look like. So there's usually no origination, processing, or disbursement fees. I'm not aware of any lender that's charging that right now. I always say student loan refinancing doesn't cost you anything but your time. There's usually terms between 5, 10, and 15 years. That might seem a little bit low, but remember, a very, very good point in refinancing is to lower that term as well as your interest rate. Also, refinance lenders offer fixed or variable interest rates. You can include federal student loans, undergraduate, graduate, your Parent Plus loans, private student loans, and some of you may have institutional loans or loans that you got through your individual school's financial aid office. A cosigner may be needed for a student loan refinance. There are requirements. We're going to talk a little bit about that. Underwriting criteria. For instance, there's going to be, employment history, maybe 18 to 24 months employment required. Always doesn't have to be with the same employer, but just showing that. Also, income. Is there an income requirement that you have to make a year or a gross monthly income? Understanding that. Also, a credit history, an established credit history of maybe 3 to 4 years with certain different trade lines, and then a FICO score may be required. So that is very important to know. And again, that's something as you're comparing and you're searching lenders that you can contact that lender, and these are questions that you can ask them. So choosing where to refinance. Who are you going to choose? Remember, after you gather your information and take stock of what you have, and maybe get a good objective of why you want to refinance in your mind, then you want to ask, first of all, that finding a lender, right? That's very important. So that's what you're going to do. So what's important to ask? And we've talked through this webinar so far, but let's just make a checklist. What are the lender's interest rates, and do they have any type of fees? What are their repayment terms? What is their borrower eligibility requirements, as well as their credit requirements? What do they require for approval? What is the application process? It's very important to understand that refinancing student loans can take up to 30 days, and that's just due to the paperwork and also requesting 30-day payoff verifications. And then there's also some regulations that we lenders have to allow borrowers to wait a certain amount of business days. It's called a right of rescission or right of receipt period, in case you decide you want to cancel before that refinance is dispersed. And then also, what type of member service do you have? One thing I put on this slide, why choose a credit union? a lot of credit unions will have that member service option as well as my option. You can call before you refinance, make that phone consultation. We can talk to you one-on-one about your specific situation. But what type of help do you get when you complete the application or before you even consider a refinance? What type of member or customer service is available for you to provide options and answer your questions? Also, benefits to look for. A lot of credit unions now and other lenders, they're offering a cash back, delayed payments and interest. So for example, 3 months, no payment and no interest accrue, as well as that cash back. And then the auto pay deduction for having that automatic payment come out of your account. And again, why choose a credit union? They're not-for-profit organizations, and they're focused on serving their communities and the members of their credit union. So not-for-profit organizations, and they do offer that one-on-one member service, those value add services for you before you make these type of decisions like student loan refinancing. So borrower requirements and eligibility. And we talked a little bit about that. So what's going to be required, as well as, the underwriting? Do you have an established credit history? This could be, anywhere. Lenders are going to ask for 3 to 5 years established credit history with certain trade lines. What type of accounts or what type of trade lines do you have other than student loans? Do you have a credit card? Do you have a used car loan, a line of credit that you used while you went to college? So this is something that you can definitely ask that lender as you're searching. Also, what's your FICO score? Lenders are going to have a requirement for a FICO score requirement if you want to do a student loan refinance. Also, employment history. We talked about that. Usually that's like 18 to 24 months continuous employment. Doesn't have to be with the same employer, excuse me. Also, steady income. What's your gross monthly income? Many lenders, private student loan refinance lenders, will have an income requirement. Also, are you a college graduate? What type of degree you have? That's a great question. There are some lenders that do require you to have a bachelor's degree from an approved school. They may have an approved school list, and that would be a requirement. And then some lenders, such as credit unions, they like you to be a member of the credit union, which just means opening up a membership savings account and being part owner of that organization. So these are great, great questions, again, to review while you're comparing and searching for that private student loan refinance lender. So let's talk a little bit about some live examples that we've had for people refinancing loans. I wanted to show you this. This link down here will take you to our refinance calculator. And again, this is a very, very good tool to utilize and to see what your savings are. So in this example, we put in the current loans balance, 2 private loans totaling $61,000. The interest rates were 9% and 9.5%, a term of 180 months originally, which is 15 years. Their current monthly payment is $630.99. So their new loan opportunities, okay, this over here to the left, this rate would be the term 120 months. So lowering the payment to, moved forward a little bit. There we go. Back to 120 months, that's 10 years. So you would be taking off 5 years from the current loan. The rate would be 4.25%. This would be the new payment. So you're going to see you're only dropping that payment by about $6 or $6.12. But look at the savings over the life of that loan. $38,593.10. Over to the right, this would be, they kept a 15-year term. The rate they lowered to 4.75. So the new payment would be lower, $474.48, a difference of $156.51, and they would still save $28,171.43. So you can see, again, I've talked a little bit about that. If you use these refinance calculators and really look at the savings that you get by doing a student loan refinance, that's very, very significant number, and might help you to budget a little bit more and dive into that refinance and, really make those payments. Be consistent. Okay, so this is a example one. So 3 federal direct unsubsidized loans and 2 federal Parent Plus loans. So the interest rates were between 6.8 and 7.9. They took a 10-year, they were on a 10-year term with 8 years remaining. Their current monthly payment, $1,311. Their total interest they would have paid would be $30,998. The borrower's main objectives, when we talked to them, they wanted to lower interest rates and terms, and the borrower wanted to take over the responsibility of the federal Parent Plus loans and put them in their name only and get the parent off of it completely. So the parent would no longer be responsible. So they did do a new loan. They actually got an interest rate of 3.45 variable. Now, this has been a few years ago when variable interest rates were at a historical low, but I still think it's a great example. They chose a 5-year term. You can see that the monthly payment did go up $412, but the total interest that they are going to pay over that life of the loan is $85.52 versus the $30,998 for a total savings of $22,446. And something that we haven't mentioned, or I have not mentioned, is there's no prepayment penalty for a student loan refinance. If you get into a 10-year term and decide that you want to pay it off in 5 years, guess what? You've just saved yourself 5 years worth of interest. There's no penalty for that, paying off early. So example 2. So this person had 6 federal direct subsidized and unsubsidized loans. Interest rates, pretty good, 3.6 to 5.23 fixed with a 10-year term, 9 years remaining. They also had 3 private student loans. They had some pretty good variable interest rates. And this was a 15-year term with 14 years remaining. The borrower's main objective, or what they were wanting to know, is student loan refinancing right for me? They're enrolling in grad school they were enrolling in grad school the next academic year. So they, wanted to just kind of get a better handle and put those loans together. So we talked to them and put some options together for them. They did not decide to refinance. Number one, because both the federal and the private student loans could be put back in a deferment or forbearance in graduate school. The federal subsidized loans, remember, may not accrue interest while in deferment. The private loans had very low interest rates and manageable monthly payments, and they could also be deferred if they decided to when this person went to grad school. And again, they have the option to refinance when they do graduate from grad school. So this was a good example. We talked to them, provided options for them. And again, they decided not to refinance. Refinance was not right for them at that time. Example 3. So we have a Parent Plus loan, $42,326 balance. The interest rate is a 7.9 fixed. They had a 25-year term with 19 years remaining, so they've been in repayment about 6 years. The monthly payment is $367. So the total interest they would have repaid by staying on this path would be about $62,189. They also had 2 private student loans totaling $36,740. Interest rates are variable 9.4 to 11.5 on a 20-year repayment term with 14 years remaining. The monthly payment, $418, and the total interest if they stayed on this path would be $58,399. Borrower's main objectives, lower interest rate, and they want to lock in at a fixed rate because you can see those variable rates are at 9.4 and 11.5. And they also want to take over the responsibility of the Federal Plus loan. So they did decide after we provided options and they compared and searched. The interest rate, their new interest rate is 8.25, and that's a fixed interest rate. They went with a 15-year term. Remember, they had 19 years on the Parent Plus and 14 on the two private loans. Their monthly payment, new monthly payment is $767. So their payment just decreased about $18 a month. And their total interest is the $59,006. And total savings estimate would be about $62,182. So that's a pretty good refinance. Lowered the term, lowered the interest rate, the monthly payment didn't lower, only $18. Keep in mind, they may have wanted, if they need a more manageable payment, they could have done a 20-year, and that payment would have went down even a little bit more. So great example of a refinance, or a good example of refinancing and when it was right for this borrower. So that doesn't conclude our refinance webinar. I thank you all for joining us. Remember, those of you who have registered will, in 2 to 3 business days, receive a copy of the presentation deck as well as the recording for today. Again, my name is Tricia Poplasian. I'm the college counselor with CU Student Choice. And if you'd like to contact us with any additional questions, please use this email address on the slide. Thank you so much.